Wow, okay. You were not kidding around with these reports. Looks like someone's been doing our crypto homework. We're talking a full-on historical deep dive here from like Bitcoin's early days in 2017 all the way to, well, today. You've got reports on everything. DeFi, NFTs, even those, what are they called? Real-world assets?
Yeah, real-world assets, RWAs, they're kind of a big deal these days.
Right, right. I'm still wrapping my head around those. But hey, that's what this deep dive is all about, right? So where do we even start? 2017, that feels like a lifetime ago in crypto years.
It practically is.
Your Coingecko report from back then, it's like a time capsule. Ethereum's doing its Byzantium thing. Jamie Dimon's out there calling Bitcoin a fraud.
Jamie Dimon. Always good for a soundbite.
Right. But then on the flip side, you've got countries like Malta and Cyprus starting to whisper about regulations.
It was the first sign that governments were starting to take crypto seriously, not just as a tech curiosity, but as something that might actually stick around.
Interesting. So even back then, amidst all the chaos, there were these hints of legitimacy.
Exactly. And those early regulatory moves, they sent ripples through the entire industry.
I bet. Okay, so 2017, we've got Ethereum finding its feet, governments starting to pay attention, and then bam, 2018 hits and things get really interesting. Remember the Bitcoin Cash fork?
Oh, yeah. That was a wild time.
Your report captures the drama, let's say, perfectly.
It was a major turning point. The first time we really saw the community splinter over a fundamental question.
Which was?
Scalability. How do you make a blockchain that can handle millions, even billions of transactions?
Scalability. The holy grail of crypto. Still chasing that one, aren't we? Still chasing it. Bitcoin Cash was just one early attempt to solve it. There have been many since then, each with its own trade-offs.
Right. It's a tough nut to crack. Okay, so we've got scalability wars. What else was brewing in 2018? Oh, right, stablecoins. Your report lists TrueUSD, USD coin. It's funny looking back, those early stablecoins, they were trying to solve a problem that seems almost quaint now.
Which is?
Volatility. People were freaking out because the price of Bitcoin was on a roller coaster, and they just wanted a crypto they could, actually use to buy stuff.
Well, yeah. Imagine trying to buy a cup of coffee with Bitcoin when its value could swing by 10% in an hour.
Exactly. You'd need a calculator and a PhD in economics just to figure out the tip.
Yeah.
So, stable coins. They were supposed to be the answer, right? A calmer, more predictable crypto experience. They were trying to bridge the gap between the Wild West of crypto and the stability of traditional finance.
Makes sense. And it worked to some extent. I mean, stablecoins are everywhere these days. But let's talk about those early attempts to bring crypto into the mainstream. We can't forget about the ICO craze. Remember those? Everyone and their dog was launching an initial coin offering.
Oh, yeah. It was a wild west of fundraising. Lots of innovation, but also a lot of scams.
Definitely. It seems like every other week there was a new article about some ICO rug pull or exit scam.
It was inevitable, really. The technology was new, the regulations were unclear. It was a recipe for, shall we say, creative interpretation.
That's a diplomatic way of putting it. But amidst all the chaos, something interesting was happening. People were starting to look for a safer, more regulated way to raise money with crypto. And that's where security token offerings, or STOs, came in.
Right. STOs were an attempt to bridge the gap between traditional finance and the crypto world.
Trying to play by the rules a bit more.
Exactly. STOs were designed to comply with securities laws, which made them much more appealing to institutional investors.
So less move fast and break things, more let's make sure everything's above board.
Pretty much.
Yeah.
And that shift toward greater regulatory clarity, it opened up a whole new world of possibilities for tokenizing real-world assets.
Like?
Think company shares, real estate, even fine art. Suddenly you could invest in these things with the same ease as buying Bitcoin. At least that was the idea.
Ambitious. Did it work?
Well, it's a work in progress. Tokenizing real-world assets is complex, both from a technological and a regulatory standpoint, but it's definitely an area to watch.
Okay, got it. STOs. Definitely need to keep an eye on those. But before we dive deeper into that, your Coingecko report from early 2019 mentions another fundraising model that was gaining traction, IEOs.
Initial exchange offerings. Basically ICOs, but with a trusted intermediary, a cryptocurrency exchange.
So instead of just launching your token into the wild and hoping for the best, you got listed on an exchange which gave you a bit more.
Credibility.
Exactly. It's like the difference between selling your product out of your garage versus getting it on the shelves at Walmart. And speaking of Walmart, your report specifically mentions the BitTorrent IEO on Binance Launchpad. That was a pretty big deal at the time, right?
It was. BitTorrent was a well-known company with a huge user base. Their decision to launch an IEO on Binance, one of the biggest crypto exchanges in the world. It legitimized the whole IEO model.
It's like the cool kids were finally starting to pay attention.
Exactly. And that brought in a wave of new investors, many of whom were completely new to crypto.
Yeah. Okay. So in just a couple of years, we've gone from Bitcoin skepticism to the birth of stablecoins, the rise and fall of ICOs, and the emergence of these new, more regulated fundraising models.
Yeah, we're just getting started.
Don't remind me. My brain is already starting to fry. Okay, so where do we go from here? Well, buckle up because things are about to get really wild. 2020, that's when DeFi summer hit. And trust me, things got heated. More on that after the break. All right, so 2020, DeFi summer. Where do we even begin?
It was like the entire crypto world went on a wild ride.
Your report from that year, it's amazing how much happened in such a short time. Yield farming, liquidity mining, these crazy new protocols popping up every other day.
It was an explosion of innovation.
Yeah.
DeFi, or decentralized finance, promised to rebuild the financial system from that ground up, using blockchain technology to cut out the middlemen.
And people were throwing money at it, hand over fist. Your report mentions these things called food tokens, YFI, DFI.money, YF value.
Ah, yes, the food tokens, a classic example of crypto's, shall we say, playful side. Though to be fair, some of those protocols introduced genuinely novel ideas.
It's true, DeFi wasn't all just hype and speculation. There were some really groundbreaking innovations happening, but like with anything in crypto, not everything that glitters is gold, right?
Right. And as DeFi matured, the focus shifted from just chasing high yields to building more sustainable and secure protocols.
Which makes sense. Okay, so DeFi summer, that was a wild ride. But by 2021, cracks were starting to show, even in the Ethereum ecosystem. Remember, gas fees were through the roof, transactions were taking forever.
Right, Ethereum's limitations were becoming increasingly apparent. It just couldn't handle the volume of transactions that DeFi was generating.
And that's when we saw the rise of the Ethereum killers, right? Solana, Avalanche, Polygon, all these alternative blockchains promising faster speeds, lower fees, and more scalability.
It was the beginning of the multi-chain future, where different blockchains specialize in different things. Some are optimized for DeFi, others for gaming, others for supply chain management. It's like the early days of the internet, where different platforms were competing for users and dominance.
So instead of one blockchain to rule them all, we might end up with a network of specialized blockchains, each with its own strengths and weaknesses.
Exactly. And that actually makes a lot of sense. In a way, it reflects the diversity of the real world, where different systems and institutions serve different purposes.
Okay, so we've got this multi-chain future emerging. What else was happening in 2021? Oh, right. This is when NFTs really exploded into the mainstream.
Yes, NFTs. They were everywhere that year.
Everywhere. Your reports from that time, they're practically bursting with NFTs. We had the rise of NFT gaming with Axie Infinity, those crazy expensive digital art sales making headlines. Even my grandma was asking me about NFTs.
NFTs, or non-fungible tokens, introduced this idea that you could use blockchain technology to represent ownership of unique digital assets, art, collectibles, music, virtual real estate. The possibilities seemed endless.
It was like the internet finally figured out how to do property rights, but for digital stuff.
Exactly. And that opened up a whole new world of possibilities for creators, collectors, and investors alike.
No doubt. But it wasn't all just hype and speculation, was it? I mean, some pretty big players were starting to take notice of this whole crypto thing.
Absolutely. Institutional interest in crypto grew significantly in 2021. We saw major companies like Tesla investing in Bitcoin.
Right, and the launch of the first Bitcoin ETF.
Exactly. These were major milestones. They signaled a growing acceptance of crypto by traditional financial institutions.
It's like crypto was finally being welcomed into the, well, maybe not the country club just yet, but at least the conversation was starting.
Precisely. And with that came a new level of scrutiny, regulation, and, for better or worse, mainstream attention.
Which, let's be honest, crypto both craves and fears in equal measure.
It's a double-edged sword, for sure. But it's also a sign of progress. As crypto matures, it's inevitable that it will attract more attention, both positive and negative, from the powers that be.
Makes sense. Okay, so we've got DeFi going mainstream, NFTs exploding, institutions dipping their toes into the crypto waters. 2021 was a busy year, but we're not done yet, are we?
Not even close.
Because looming on the horizon is the, well, let's just call it the RWA revolution.
Real-world assets. It's a mouthful, but it's potentially one of the most transformative aspects of this whole crypto revolution.
Your 2024 report really emphasizes RWAs. What's the big deal? Why should our listener care about this?
Imagine a world where you could invest in real estate, fine art, or even intellectual property with the same ease as buying a stock or a bond.
Okay, that sounds Kind of amazing, actually. But how?
Through tokenization. We've talked about how NFTs can represent ownership of digital assets. Well, the same principle can be applied to real-world assets. You can create a digital token that represents ownership of a piece of real estate, for example, and then trade that token on a blockchain.
So instead of having a deed to a house, you might have a token on a blockchain.
Exactly. And that token can be fractionalized, meaning you can divide it into smaller units, making it more accessible to a wider range of investors.
Okay, I'm starting to see the potential here, but this is still pretty early days for RWAs, right?
It is. There are still a lot of challenges to overcome, both from a technological and a regulatory perspective. But the potential is huge.
Huge. All right, so we've got RWAs on the horizon. What else do we need to know about 2022 and beyond?
Well, for one thing, 2022 reminded us that the crypto market can be a volatile beast. Remember the crypto winter.
How could I forget? I think my portfolio is still trying to recover.
It was a wake-up call for many investors, a reminder that high rewards often come with high risks.
No doubt. So what happened? What caused the crash?
It was a confluence of factors, really. Macroeconomic headwinds like rising inflation and interest rates definitely played a role. But there were also some crypto-specific factors, like the collapse of the Terra Luna ecosystem, that shook investor confidence.
Right. The Terra Luna crash was a big deal. It wiped out billions of dollars in value and sent shockwaves through the entire crypto community.
It was a stark reminder that this is still a relatively young market, and there are always going to be risks involved.
Okay, so 2022 was a reality check for a lot of people, but what about 2023 and beyond?
Well, despite the downturn, the crypto industry has shown remarkable resilience. In fact, there are those who argue that the bear market has been a blessing in disguise.
A blessing.
Think about it. The hype has died down, the speculation has subsided, and the focus has shifted back to building real, sustainable products and services.
So it's like a cleansing fire, burning away the weak projects and leaving only the strong ones standing.
That's one way to look at it. Yeah. And it's during these periods of relative calm that we often see the most innovation.
Interesting. So what kind of innovations are we talking about?
Well, for one thing, the DeFi space is still evolving at a rapid pace. We're seeing new lending and borrowing protocols, innovative insurance products, and even the emergence of decentralized prediction markets.
Prediction markets, like betting on the outcome of elections or sporting events. But on the blockchain.
Exactly. It's an example of how blockchain technology can be used to create more transparent and efficient markets for things that traditionally have been difficult to measure or predict.
Okay, that's pretty cool. What else is on the horizon?
Well, NFTs are still evolving beyond just digital art and collectibles. We're seeing the emergence of NFT-based ticketing systems, loyalty programs, and even supply chain management solutions.
So using NFTs to track products as they move around the world.
Exactly. It's all about using blockchain technology to create more transparent, secure, and efficient systems for managing real-world assets and processes.
This is a lot to process, but it's also incredibly exciting. It feels like we're still just scratching the surface of what's possible with this technology.
We are, and that's what makes this space so captivating. It's constantly evolving, constantly pushing the boundaries of what we thought was possible.
So where do we go from here?
That's the million-dollar question, isn't it? The beauty of this space is that no one knows for sure what the future holds. But if history is any indication, it's going to be a wild ride.
A wild ride indeed. And speaking of wild rides, we haven't even touched on things like the metaverse, Web3, and the rise of DAOs.
We'll save those for another deep dive.
Agreed. But for now, let's take a step back and try to make sense of everything we've learned. Because honestly, my head is spinning.
As I said, it's a lot to process. But that's the nature of the beast. Crypto is constantly evolving, constantly throwing new challenges and opportunities our way.
So how do we even begin to make sense of it all?
Well, that's where we come in. We're here to help you navigate this complex and rapidly changing landscape, to break down the jargon, separate the hype from the reality, and provide you with the insights you need to make informed decisions.
Because ultimately, knowledge is power. And in the world of crypto, that's never been truer. All right, folks, that's a wrap for today's deep dive. We hope you found this journey through the annals of crypto history informative and, dare we say, entertaining.
We certainly did. It's always a pleasure to geek out about this stuff.
And to our amazing listener, thank you for sharing your impressive collection of reports. You've given us a lot to think about, and we can't wait to see what the future holds for this incredible technology. Until next time, happy exploring.